What is up, beautiful people? What if I told you there's a way that I'm using to make consistently 16 to 20% returns on my money every single year without gambling on stocks, without hoping crypto bounces back, and without working any harder? It might sound insane, but this is exactly what I'm doing, and in this video, I'm gonna break down exact strategies step by step so you can see how it works. Stay tuned. Here's what I'm doing. I'm taking all of my income and putting it into something called an indexed universal life insurance policy, or IULs. Now, the original purpose of these policies was simple. If you died, your family received a death benefit, pretty straightforward, and your family's taken care of for life. But what makes these policies incredible is they can also act as a powerful financial instrument. They allow you to borrow from yourself and grow your money at the same time. Here's the basic concept. I put money into the insurance policy. The insurance company then takes my money, along with money from thousands of other policyholders, and uses it to buy stocks, bonds, options, and other investments. They grow that pool, return themselves a slight profit, and then credit my account with growth. This process is called insurance float. It's a win-win because the insurance company gets to use my money to make a profit, and I get to earn more than I probably could on my own because experts are managing billions of dollars at scale. But here's the even better part. Once my money is in the policy, I can actually take it back out in the form of a loan. The carrier will typically let me borrow about 80 to 90% of the cash value of my policy. So for example, if I put in $60,000, I can usually take out about $50,000. And here's the crazy part. Even though I take out that $50,000, my full $60,000 keeps compounding inside the policy at around 8 to 12% on average. That's because the insurance company is lending me money from their general pool, secured by my death benefit. My own cash value never leaves the account. It keeps working for me. In other words, I have the first right of refusal on my own money. This is exactly how banks operate. When you put money in your checking account, the bank doesn't just let it sit there. They keep it on their balance sheet while they loan it out at a higher rate. They profit from the spread between the two. With an IUL, you're flipping the script. You're becoming the bank. And once you feel what it's like to be your own bank, you'll never look at money the same way again. So you're probably thinking, Jonah, like, okay, you're taking a loan against yourself. Is there interest against that loan? And like, yes, there is. Right now, my loans cost 5.5%. But while I'm paying that, my cash value is still growing at 8 to 12%. That difference alone is already an arbitrage. But here's the real kicker. The 5.5% interest doesn't go to some outside bank, doesn't go to some other policy. It actually goes back into my policy, which increases the value of my account and keeps it compounding. So every time I make a payment on the loan, I'm actually just growing my own value of my policy that I can take a loan from later. So instead of it being a cost, it's fueling even more growth inside the policy. So now you might be wondering, what do I do with the $50,000 loan? Because it's pretty cool. I got $60,000 compounding at 8 to 12%, but okay, I take out a loan. Now what are you doing with that money? And this is where things get crazy. I use it in real estate. I lend that money on my own flips or on other investors' flips at around 12% interest. So that means my money is working in two places at once. Inside the IUL, my cash value is compounding at 8 to 12%, and outside the IUL, the exact same money is out in the real world, earning me interest on another 12%. That's how I'm stacking my returns and consistently ending up making 18 to 24% per year, because I'm able to have my cash in two places compounding at the exact same time. So let me give you like a real life example, because I know this can get really confusing, right? So I put $60,000 into my policy at 8% growth. That makes me about $4,800 in a year. I then take out $50,000 loan at 5.5%. So on paper, that looks like it cost me about $2,750 in interest. If you stop right there, it looks like I only made $2,000 or a little over 3% if I did nothing with the money. Not very exciting, but that's not the full picture, because now I take the $50,000 loan and I lend it out at 12% on a flip let's say in San Pablo. And that deal also earned me another $60,000 this year because it was my flip. So I got the profit of the flip, I got 12% on my money right there, and I just made insane returns. But let's just put together the interest and the IUL. So if we put it together, I made $4,800 inside the policy. I made $6,000 from my flip loan. That's a total of $10,800. And remember that $2,750 cost of the loan is not really a cost because it just goes back into my policy and keeps compounding, which is incredible. So in reality, I cleared about 18% that year on my $60,000, and that's on the conservative side. That was like a bad year for the market. On some of my deals, my rates can climb even higher into the 20s. So now think about that for a second. That's money working for me passively. That's not with tenants, that's not with toilets, that's no trading screens, no guessing the market, just a system that quietly produces results year after year after year. And then on top of that, here's another piece people don't always talk about, is I'm borrowing against the death benefit of my life insurance. If I never pay back the loan, let's say I just don't even pay the interest payments and I just want to keep all of the loan, right? It doesn't even matter. The balance just gets deducted from the death benefit. So that means while I'm alive, I could just keep all of the $50,000 and still have stack returns, still have the original $60,000 compounding, and have my profits from real estate. And the policy wouldn't even care. My descendants will get less money when I die, but I could literally just keep all the money and never even pay it back. And it's all tax-free because it's a loan. It's a loan, it's not profit, so it's all tax-free when I receive that loan. So here's how this works so well. The insurance company invests with experts. So if you're wondering about the mechanics behind this, the insurance company invests with experts, it earns float and lets me leverage my own money while it still compounds. I can borrow 80 to 90% of my value, often in about a month of funding the policy. So I put in $60,000 and then I can get $50,000 out in a month. I then put that money to work in real estate. It allows me to do exactly what a bank does, but I'm the one capturing the spread. I'm making the profit of a bank. And let me be real with you, once you understand the system, you can't unsee it. You'll realize how much money you've been giving away to banks your entire life, and you'll never want to go back. So let me try to summarize this in as plain of English as I can. I put my money into an IUL, my cash value grows at around 8 to 12%, I then borrow back most of it at about 5.5%. I take that loan, use it to earn 12% lending on flips. The result is that I consistently make 18 to 24% returns every single year, all while my money is still compounding inside the policy every single year. And if I never pay it back, it just comes out of the death benefit, which means my family still will get something, but just not as much, and I get to keep all the freaking money. So I know this can sound confusing, like it's really hard with the first time you hear it, but once you understand how the pieces fit together, it's one of the most powerful wealth strategies out there. That's why I included a link below where you could, if you want, set up a call with my life insurance advisor if this intrigues you, if you want to know more, right? I'm including that link in the description where you could meet with them to ask questions, see how it would work for you in your specific scenario, and ask any questions that you have about this entire process. They can run it with you exactly how this would look for your situation, how you could make money in the exact same way. And this is just how I've been able to consistently make 16 to 20% returns on my money passively. And it's something you can put into whatever type of investments you want. It doesn't have to be real. So anyways, if you're interested, the link's below. Thank you for watching, and I will see y'all on the next one. Peace.